Good afternoon, party people. So, DBGI stock, Digital Brands Group Inc. Exciting news has come forth now about a new hedge fund who is investing in this stock. So basically, the short of it is they're called Armistice Capital, and they're from NYC. Go figure, right? Anyways, they just bought 20,000 shares yesterday, and now the institutional ownership of the stock is 3.75%. That's a big deal for a small cap stock like this. And the fact that they're willing to take that risk kind of just shows you the future potential of this stock. So the cost to borrow, which has to do with short selling, is now like 250 to 260%. So that means really high demand for shares to short. So short sellers are kind of preparing to short this stock. And, it probably will go down some more. It'll probably hit $3 by the end of the year, and then before they go to report fourth quarter earnings next year, it'll probably go down some more. So between $2 to $3 a share, and then after that, in the first quarter of 2024. So once that gets reported, it'll be like April, I guess. And then second quarter 2024, so 3 months after that, so June or July. It's going to be really interesting to see what's going to happen here, because basically it could easily do 10 times from where it is right now. And if it goes down lower, and I'm gonna average down my shares, because I unfortunately have been investing for a while now, but I'm gonna average down my shares, and once it hits the bottom, basically I could average down to where if at 10 times I could actually make a profit if I buy between now and end of the year, say at $3 a share, and I buy, like double the amount of shares I have now, I could average down so that when it hits $20 to $30 a share later next year, it'll 10 time. So Armistice Capital, they have 4.3 trillion AUM, assets under management. They're mostly in biotech, biosciences, health, other associated health stocks. But they're not a hedge fund that messes around, if you catch my drift. And the CEO of DBGI, Hill Davis, he's a former equities analyst for Citadel. Citadel is the most profitable hedge fund in the entire world. It's just kind of a no-brainer. They're obviously deliberately manipulating the price of this stock down. And, it's probably not real ethical, but it's just kind of the way the world works. Yeah, it's just hedge funds kind of control our country. Like it or not, they do, and they're like the market makers. It's if you start a corporation that just buys stocks, which is what hedge funds basically are, your corporation will make more money than if you go out and start a corporation that like builds stuff. Home builders, for example, the home building industry is extremely cyclical. It can collapse. It can suddenly collapse, especially right now with high interest rates. The housing market can collapse. So what are people going to do? They're going to buy stocks, and this trend is going to probably continue for quite some time. It's going to be really, really interesting. The rest of this decade. So Armistice Capital, they are a very impressive company. The more I research them, the more so they're invested in over 100 different companies, and so Armistice Capital and Citadel, which again is where the CEO used to be an equities analyst. Between those two, they are the biggest market makers in our entire country, and they're both involved with DBGI stock. That should tell you something. And I have noticed that they have listened to people's requests, and maybe even it was me. I have no idea. I mean, well, when I said something about environmental concerns, they're now putting environmental information on all of their clothing on their website. And that's kind of something that I don't know has really been done before in the apparel industry. But they're talking about sustainable fabrics from Spain, Italy, and Turkey. And as far as apparel goes, these countries tend to be more ethical than China. China is the one you kind of want to stay away from. So, they're using these dyes that are environmentally friendly and lower impact on the environment. And at least they're saying that. I don't really know. We don't really know. Anyways, the fact that Armistice Capital has bought 20,000 shares on November 15th, that's a big deal. That's a long position, so they're going to hold those shares for quite a while. And the more the time that goes on, it's such a low supply of shares right now. It's only like 579,000 shares, and the supply of shares is probably going to increase to like 800 and something thousand. I think they said, the CEO just said, because of the sale of pre-funded warrants. So Armistice will probably acquire more shares through converting stock warrants into common stock, which is typical. Anyways, it's interesting. It's like investors assume this company is going bankrupt, and it's not. Their revenue is increasing, and their bookings for first quarter for sundry clothing have tripled. So those are wholesale deals where retailers have already booked inventory for first quarter of next year. And so those with Sundry alone, which is just one of their brands alone, have tripled. So that's pretty awesome. And they are doing some pretty unique stuff. It kind of has a very modern American Apparel kind of feel to it. And it's still hard to get good quality denim. A lot of their stuff is sold out. I mean, I still can't order some of their stuff that I want because it's been sold out. So yeah. Anyways, happy investing, and yeah, this is a difficult stock for advanced people that are high risk. investors, and it's no joke. So this isn't something that most people want to get involved with. Um, I'm obviously in real estate, so I kind of have some freedom that most people don't, as far as what I can do, and I'm also used to sitting on things for years and years. You know, uh, Buying and selling vacant land, obviously. So yeah, I mean, is this stock going to do better than a biotech company that some of the other biotech stocks that Armistice invest in? Is it going to do better than that? Probably not. Um, I'm already invested, but I'm going to buy more shares, and I really think that this could 10 times somewhere around summer of next year. It already suddenly spiked to like $23 a share back in September. That already happened for like no apparent reason. There was no news. In fact, they did a share offering, issuing more shares, but they're paying off their debt. And a lot of investors aren't talking about this, but back in June, they actually paid off. They had $10 million of their debt actually waived or forgiven. So that's a really big deal. So they're now down to like $6 million in total debt. That's pretty low. And that's exciting because now they have internal free cash flow of supposedly around $500,000 a month. And that won't really be reflected until fourth quarter statement comes out. But their balance sheet is actually looking good. There's more assets than there are liabilities. Most people don't really talk about that. But the balance sheet, honestly, is the most important thing you can really look at from when it comes to stock investing. It's sort of a meme stock, but is it an AMC? I don't think it's an AMC where it's in an industry that's going out of business. I think, if anything, clothing and apparel is heading more online, which is what they're doing. They're a modern company that has been built around digital commerce. So they have a new business model, and they're branching off into sustainable clothing, which is what I predicted they would do. Maybe they even watched my video. I have no idea. I don't know that hedge funds really care about people like me or you or whoever. Maybe someone somewhere does care. It's probably pretty unlikely. But, when it comes to the stock market, NYC, and Manhattan, they control the market. So Armistice Capital, who was all NYC people, for them to suddenly be buying up tons of shares and taking along, they're going to sit on them for quite a while and probably buy some more whenever their buddies manipulate the share price down. Yeah, it's interesting stuff. It kind of just goes to show you there's a lot of value in a reverse stock split company, which is what this is. It had a reverse stock split back in late August. They're complex, and there's lots of bits and moving pieces, and you have to read all the filings and look at the supply of shares. But there's some real value here. But you're going to have to make a big, big investment. And the more people that make big investments and sit on their shares, eventually it'll cause the share price to suddenly spike up, which is what happened back in early September, to $23 a share. And, you don't, to make money on a stock, you want to sell when the share price suddenly spikes up. And that's difficult. You have to use limit orders. You have to watch the market. You have to do all kinds of stuff. There aren't options for this stock because it's too small, of a share price. And I think there's all these. I'm not going to go into the technicalities of NASDAQ requirements because people just don't really care. But anyways, they do require like $500,000 shares. So it can't really do another reverse stock split. If it goes down below $1, which is the NASDAQ minimum share price, it'll become an OTC market stock. And ironically, if that does happen, it could be an extremely good value opportunity because they're talking about taking the company private, because public investors don't really value this stock for whatever reason. And they should. It's got revenue trending upward. They're paying off their debt. It's an acquisition company, which means the sole purpose of the company is to acquire clothing brands, analyze their revenue, and not just sit there and have it be one brand and cheerlead one brand. Abercrombie and Fitch, yeah. That's what the mistake that most companies are making now in their business model, and have been since decades and decades, is they take one brand and they cheerlead it. They don't look at their actual revenue. They don't analyze the revenue. They just cheerlead it. And clothing is a fast and apparel is a fast paced industry where things change really quickly. And they also mentioned Anthropologie. They're selling their wholesale sweaters at Anthropologie, and they're selling out within a week. So next time Anthropologie orders these sundry sweaters, they're gonna make a larger order because they sold out all their sweaters in less than a week, and their customers are like, we want to buy more, but we can't because there is no more. And Anthropologie is like a super hip place that's too cool for me. I don't buy there because, frankly, I'm just not cool enough. But anyways, it is what the cool kids buy, and I'm not one of them. But as far as from an investment perspective, you definitely want to sell to Anthropologie, and the fact that DBGI, through its brand Sundry, is now selling a lot to Anthropologie, wow, that's spectacular. The CEO was kind of understated about that because he can't really go into all that. But commentators like me, I can. Yeah, the consumer cyclical sector, there is a lot of room for value stocks and for share accumulation. So what that means is you day trade, you buy when it's low, you sell when it's high, you turn around on the same day or the next day, then you take whatever you made and you buy more, and then you just keep doing that day in, day out, and you accumulate shares and you accumulate shares. And if enough people do that, they're retail buyers like me on one stock, or like Foot Locker stock is another good stock because it pays a dividend, and eventually DBGI will pay a dividend. And so that's what you want, is you want to just accumulate these shares. And even if you're only accumulating, like 10 to 20 shares or 50 to 100 shares per day or per week, you just gradually accumulate them. And as long as the company doesn't go bankruptcy, you're going to be fine. And DBGI, it's not really possible for it to go bankrupt because they're their assets are more than their liabilities. They're talking about going private and selling their corporation, and then the share price would 10 times if that happens. So that would be a good thing. And if there was a possibility for like, I don't even know, something, suddenly their just revenue dropped off, they would just sell the corporation, and so investors, shareholders would be fine. So there isn't really a bankruptcy risk anymore, so that's pretty awesome. So that's why these hedge funds are jumping in now and buying up all the stock. And besides hedge funds, there was other ownership of non-retail of like 25% in the graph that I looked at. So that's pretty awesome. I mean, some of this stuff is a double-edged sword. You don't want to create a monster. Yeah. But as far as like all the short sellers making all these comments online or whatever, they like market manipulators, because you can manipulate stock without short selling it. That's not really being talked about, but you can. And then there's naked short selling, which is already illegal, but it's happening anyway. And the SEC isn't really doing anything to stop it. So it's kind of like just very wink, wink, nudge, nudge. No one really knows what's going on, why it's not being stopped. But it is happening, like with AMC stock, GameStop stock. DBGI was like kind of on the verge of becoming a meme stock. And then once GameStop kind of collapsed or whatever, that kind of went away. But it is really, a good value stock in its own right without being a meme stock. Anyways, get ready for the Naruto run, or whatever like Gen Z is calling it now, in spring or summer of next year. All right. Have a good holidays, everyone. Take care.